Hi everyone, Leigh here from Martinuzzi Property Group with my weekly real estate market update. I hope you're staying cool, everyone. This week in my real estate blog, which you can find at martinuzzi.com, I talk about inflation in Australia. So the RBA sort of suggested that annual inflation would rise to about 8%, and it is actually sitting at about 7.8% at the end of the December quarter, which is up slightly from the previous quarter. But all the experts are saying that definitely inflation is slowing. Globally, the trend is slowing as well. I'll put a little graph in my blog there that you can check out that shows global inflation and where it's expected to go this year and next year as well. So it definitely looks like a downward trend, which is hopefully refreshing news because inflation has gotten away from us. And it's definitely put a softening to the property market across Australia and across the globe as well. And there's a number of reasons for that. And we've seen this late into last year. The number of property transactions and property coming to the market was definitely down on historical lows. So that actually then, has a flow-on effect to household goods and things like that as well. People reduce spending on household goods because they're not buying properties that need to be furnished. We also know the building costs are still up. They're up 1.9% in the December quarter, but that was quite down on the previous quarter of 3.2%. But we have seen, due to the building costs, demand for land and also dwelling approvals decrease significantly as well. And the biggest impact that's affecting the property market at the moment is buyer confidence. There's a large level of uncertainty around what the cash rates are doing and what interest rates are doing as well. And as the interest rates keep rising, affordability reduces as well, and borrowing capacity reduces as well. So that's obviously having an adverse effect on the amount of buyers in the marketplace looking to purchase those properties that are for sale. I feel that we have a little bit of a happy medium here on the Sunshine Coast. Number one, we did have a lot of population growth come up through that pandemic period, and that pushed up the prices dramatically. So in Queensland or Brisbane specifically, prices were up 43% on the Sunshine Coast, somewhere around that figure as well. And what we're seeing now is definitely a reduced amount of properties for sale. So whilst the demand for properties is down, the amount of properties is still low as well. So that's keeping a little bit of happy medium between buyer demand and seller demand as well. So I think that's slightly refreshing news. What we will see this year, is a softened property market. We're not going to see what we've seen in the past couple of years. It'll be a stabilizing market, a little bit uncertain at the start of the year, and they're suggesting that by the end of the year, that cash rate will start to ease as inflation draws back in. We're definitely way off the RBA's target of 2 to 3%. But I expect by the end of the year, they'll start easing that cash rate back, and that'll begin a new property cycle as well, which is what we always go through. So that's the news here, guys. We've got a number of properties coming up to the market and a number of great properties on the market as well. So if you are buying in the area, give us a call. We'd love to connect you with one of these properties, find the right fit for you. So give us a call. And guys, anything we can help with, property related, rentals, sales, advice, you name it, community, give me a call. Talk soon.